Okay. So first of all, we'll be studying the financial statement formats. They're very simple to understand, right? They're very basic. And after studying them just for 10, 15, 20 minutes, after that, we'll start with the consolidation process. Because if we are clear about the normal statement formats, then only we can get the consolidation topic clear enough in our mind. Okay. So first of all, I am going to make the first financial statement. Let me write over here the topic name. This is financial statement formats. Okay. So first of all, there are many kind of financial statements in financial accounting. The first one and the most popular one is known as statement of profit or loss. Profit and loss basically. Okay. Now this, I'm writing the full word over here that we are studying the format obviously. So we have to study the full word. After that, a small phrase comes. So statement of profit and loss. So the phrase is for the year ended, let's say 31st December 2021. Okay. So this is the full word for this. What happens is that businesses create this whenever they are finalizing the year, whenever they're finishing the year, right? So this is created, all the financial statements are created at the year end. After the 12 months have passed, so these financial statements are created. Okay. So first of all, we are discussing the statement of profit and loss for the year ended 31st December. It can be any year end. Okay. Just a second. Okay. So they're very simple formats to follow. They're very simple to follow. There is nothing much to discuss. First of all, what we have over here is that I'm creating two columns, right? So these are two columns. Now, first of all, the first everything that we write over here is sales. Okay. And sales is written on this side, because you can also say, you can somewhat say that this is like a debit side and this is credit side, right? So all the incomes are written on this one and all the expenses are written on this side. Now, after we write the sales, we minus from this one figure which is called cost of sales. So this is just like if you're selling some product, right? And let's say you're also incurring expenditure on that. You're purchasing that very product to sell it to the customers, right? So all of the expenditure that you're doing as regards to sales, as regards to doing sales, is called cost of sale. Now it has a very simple formula over here. The formula I'm writing over here. So what we do is, this is the formula for cost of sales. So opening inventory, we add in this purchases plus purchases, and we minus one thing over here, which is closing inventory. Okay. So opening inventory plus purchases minus closing inventory. Now you also remember when we studied the inventory topic, we also studied the opening and closing inventory double entries as well, right? So in the double entries, I was telling you that you will get it more clearly when we study the financial statement formats, and I will be explaining you that as well today. Okay, after we do all these financial statements. So what we do is that all these expenses are added up, they are accumulated, and the total over here is minus from the sales, because ultimately what we have to do is we have to minus it from the sales. We have to subtract it. Okay. Now once we subtract these cost of sale from the sales, the figure that we get over here is, it's called gross profit. Okay. Gross profit is a figure that we get after we do sales minus cost of sale. This is the first kind of profit. Okay. Now after that, it's just like we write any other income that we have, right? Any other income will be written on this side. Basically, it will be added in the gross profit. So other income can include like any kind of rent you have received, any kind of bank interest you have received, any kind of dividends you may have received, right? So other income consists of all these things. Now the final thing that is subtracted from here is expenses. So expenses have different types. I'm just writing some of them over here. Let's say admin costs, like the administration costs, right? Let's say the heating expenses, heating expense, lighting expense, right? So all of these are expenses. There is one major expense for the company as well, which is called tax. So tax expense is also minus from here, right? And some companies also take loans as well. So they have to minus the interest charge as well, interest expense, which in other words, you remember from the capital structure chapter, it was known as finance cost as well. Okay, but we can call it interest as well. So whatever loan interest you pay to the banks, it's called finance cost or interest expense. So all of these expenses are written over here, and when they are accumulated, again this is just like 5 examples, they are countless. If I give example, they are countless in actual companies. So when we total them and we minus from here, we finally get the figure over here, which is called profit for the year. Profit for the year, and this is the final profit that we've got over here. Okay, so this is basically, you can see, I'll send you these notes as well, if you're not making it, no problem, because these statements are a bit long to copy, right? So profit and loss, again I'm repeating, it's made for the year. That means this is made for the 12 months. Okay, so for the 12 months that have just passed, let's say we are standing right now on 31st December, right? And the 12 months, the prior 12 months that have passed, for that we'll make a statement of profit and loss. So either it will show a profit, either it will show a loss. Okay, so there is a loss figure as well. If it is reported as a negative figure over here, right, then it is called a loss. Okay, right? So this was statement of profit and loss. Right, now the second one and the more complicated one is called statement of financial position. Let's move to that as well. So this one is called statement of financial position. Okay, now again I'm writing the full word over here, like in the profit or loss we just saw above that we write the full word as for the year ended, because we are just producing it for the 12 months that have passed, right? But the only difference between financial position and profit and loss is that in financial position, it represents us the true financial position of the company as at. Okay, so the word over here is used as at. As at means that we are currently standing at, let's say, 31st December 2021. So it's showing, let's say we started business 10 years ago. So it's showing a timeline of whole 10 years, not just of 1 year, not just of 12 months. It's of the whole 10 years that we started the business. Okay, so that's why the whole word over here is as at, let's say, 31st December 2021. So as at means we are standing right now. So what is the current condition right now as at? Okay, so this is statement of financial position. Again, 2 columns are created over here as well. Now, first of all, there are different headings over here because this is much complicated and a much detailed statement over here. So first column over here, we write non-current assets. Okay, after we do this financial position, I'll remind you one more thing which we studied before as well. So you'll automatically get that the connection between that thing and this statement. Okay, now first of all we write non-current asset, right? And in non-current asset we have different things, like we have studied IAS 16 as well, right? So property, plant and equipment, it was known as IAS 16, right? And after that we've got intangible assets as well over here, which was basically IAS 38, right? And these values we are writing, these are the carrying amounts. Okay, so carrying amounts means that this is written after deducting the depreciation. Okay, so these are written over here on this side. Okay, there is actually no debit credit here, we can write it on any side. Now after the non-current asset, we write the current assets, because I told you for assets there are 2 types, right? Non-current and current. So in current assets, I told you these are the assets which are less than 12 months, which last less than 12 months, right?
Sorry, why it goes to the credit side, non-current asset?
Over here, there are no sides, okay? On financial position, there is no debit credit. So there are just 2 columns just for making the presentation easier. In actual terms,
I thought it was debit and credit, sorry.
No problem. In actual terms, you can say that in profit or loss, it's not actually called debit and credit. We are just making it again for making it just neat, right? Just to present it to the shareholder, just become it presentable. Okay, but I've just named it debit and credit so that you can easily remember them. Again, we can write the amounts on any side that we want. Okay, now after the current assets, we have after the non-current, we have got the current assets. In current assets, first of all, we write receivables, because this was the first example. Receivables. So when we do credit sale, we have receivables, right? So receivables was the example. After that, we've got inventory. This is very important. So always remember that in financial position, I told you this as well some time ago, that we all only write the closing balances in the financial position. So either it's property, plant, equipment, either it's a liability, either it's a capital, either it's inventory, anything we write, always we write the closing balances of that. Okay, so receivables, inventory, why we are writing closing balances? Because we are standing at the year end, right? So the opening balance will not make any sense over here. Okay,
Okay.
so receivables, inventory, after that we've got cash and bank, and one more thing comes over here, which is called prepayments. You also remember that prepayments is an asset, right? When we studied the accrual and prepayment. So these four are our current assets: 1, 2, 3, and 4. Okay, when we add up all these, when we add up these in this total of non-current assets, we get the final figure, this one that is below the line over here. This is called, this figure is called total assets. So this is basically representing that total assets include non-current as well and current as well. Okay, now I am highlighting this figure right now because this will be used when we finish this statement. I'll tell you what is the connection between them. Okay, now after this, after current asset, after writing all the assets, we have the second thing which is over here, which is called equity, or in other terms you can also call it capital, but in normal terms it's written as equity. Okay, now in equity there are a total of four things. So first of all, share capital, right? Then we have share premium. After that we have revaluation reserve, revaluation reserve, and the final thing over here is retained earnings. Okay, so these four things are there in the equity section. Let me highlight these as well so that you don't get confused in these. These are the headings, right? This as well, and this total asset as well. Okay, so equity or capital includes four things: share capital, share premium, revaluation reserve, retained earnings. Now equity, as you remember, it was any kind of investment into the business which is not involving any kind of liability. Like it's right, it's not a loan, it's not a liability, it's just given by the pocket of shareholder or by the pocket of owner, because shareholders are, in other words, owners as well of the company, because they own most of the shares, right? So all of these things, when they are added up over here, they are written on this side. Okay, this is the total of equity. Now the final thing that we've got, the final thing I'm writing over here on the next page. So let me write continued. Okay, now the final thing that we have over here is called liabilities. Okay, so first of all, again, just like assets, we write non-current liabilities, right? So in non-current liabilities, let me highlight this. So non-current liabilities, first of all, not first of all, just we have one thing in this, which is basically long-term loan. Long-term loan, and it is written on this side, let's say. Okay, after this we have got current liabilities. Now non-current liabilities, you remember, it was any kind of liability which is more than 12 months, more than 1 year, right? Now in current liabilities, the liabilities which are less than 12 months, less than 1 year, this includes, first of all, we have the word payables. When we do a credit purchase, we've got payables, right? After the payables, we have got another word which is called accruals. So just like we wrote prepayments in this asset side, as you can see over here, right? Just like we wrote prepayments, there is accruals word, the opposite of that. It's a current liability. Okay. Now after accruals, what we have is overdraft. So overdraft, I already told you in one class that it is like a negative balance. It's just like a facility taken, and in other words, it can be called like a short-term loan, because normally, like 99% of the times, it is not exceeding 12 months. It is a very quick cash facility. Okay, so payables, accruals, and then we've got overdraft over here. I think there is nothing much more in the current liabilities. So we just total them off over here. And what we do is that you can see this was the equity balance, this was it non-current, and this was the current liabilities. So when we total them off, we get the final figure of total liability and equity. So it's just not liability, it's equity as well. So total liabilities and equity, because we are adding the equity figure as well. Now this is the second highlighted figure over here. Now why did I highlight the total assets as well? The reason is that the total assets should be equal to the total liabilities and equity. And this brings me to one concept which I was telling you in the start, that I will connect it at the end. And that is very simple. That is known as accounting equation. Okay. So statement of financial position, the good thing over here is that statement of financial position is directly basically the concept of accounting equation. Now you remember accounting equation was asset is equal to capital plus liabilities. So you can see the same thing we are doing over here. The total assets, this figure, this one should be equal to total liabilities and equity, right? So the same thing we are doing in this case as well. So you can say that accounting equation, the statement of financial position is based up on the accounting equation. We can clearly say this.
Okay.
Okay, right. So these were the two formats. I hope you're clear about them. Obviously, the detail will come after we study all the after we do all the questions. This actually does not have any questions, but I was just explaining you because we are starting consolidation, and if we have a good grip of these normal financial statements, we can easily study the topic of consolidation as well. Okay, now please note, this is not consolidation. Right now we have not started consolidation. This is just the financial statement format for the normal companies. Like for example, they're
Okay.
operating just as one. This is for the sole traders and for the companies, normal companies. Okay,